All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everybody?
Hey man, the stock closed a little. We closed the week a little higher today. I think if you look at across the sectors, technology and chips kind of rose up a little bit today, right? We seen some movement today. The Nasdaq led the benchmarks today, closing up at 0.29%. S&P was at 0.42%. The Dow Jones was at 0.29%. So what is happening? I mean, we saw a lot of sell-off leading into July, and I think a lot of those, especially in the chip sector and the tech sector, we saw a lot of selling in going into June and leading into July the first week. So I think we're seeing a little bit of bias rumors, maybe people coming back into those stocks to buy them again, but overall, we have seen some good movement today that kind of give us a little glimpse into going to next week. But then again, we see banks about to start, reporting earnings. I forget when the first bank is going to be reporting, but that's also going to be very important in this economic sector right now because depending on how the bank report, it's going to determine how the stock market is going to go in the next couple of weeks. So let's jump in right in, man. Let's talk about what's this week look like. I know we started the week with a little shaky. I still haven't seen the market make any crazy move to the upside or downside. I feel like we're still kind of like choppy right in this middle right here. What are we waiting for? I don't know. There's a lot of stuff going on. There's volatility happening in the market right now. So I think the market's going to gauge which direction to go. So Ale, man, let's dive in. Give us your analysis and your thoughts on this week.
Yes, I'm looking at the major indexes. So the three that I follow the most, I'd say four. So QQQ, SPY, IWM, and then RSP. I mean, if you just look at what we have done going back to mid-June, we've just been trading in a range. Like
Yep.
that's all we've been doing, trading in a range, a holding pattern. So if you look at IWM, we've been trapped between 288 and 302. So right now, you're just seeing a bunch of consolidation, no real conviction or direction on where it's gone over the last month. We take a look at QQQ, we kind of same thing. We're kind of trading between 745 and call it 695, where we've just been trading in this range, haven't really gone anywhere over the last like month. And then if we look at SPY, same thing. We've been trading between 758 and 722. So again, a lot of consolidation, trading in a range. And then RSP, the RSP is a little bit more bullish, not as range bound, but you kind of see we've been kind of stuck between a high of 216.37 and I'd say a low of 207.64. So right
Mm-hmm.
now we're basically trapped from a technical standpoint. We're not seeing any real like direction one way or another. So I think that we're just waiting on second quarter earnings to
Yep.
see what these companies report, what they say about what the future looks like, and all that stuff. So that will probably give us an idea of where we start to head into towards the end of the year. A lot of these companies have been spending a lot of money and raising a lot of money when we look at the big names. Now, the
Yep.
only exception to that hasn't really spent a lot of money and they usually don't spend a lot of money is Apple. Apple is the one company when we look at this whole AI build out, they are not spending a lot of
They're not
money.
spending a lot of money. Yeah.
They're just kind of waiting and kind of figuring out what it is that they're going to do. But Microsoft, Nvidia, Oracle, all these other companies are spending a ton of money on this build out. And
Yep.
until we see what they report for the next quarter, I think we're probably just going to be in this holding pattern. And I think if we look at the volume for a lot of these days, the volume has been low. Like the volume was super low today on a lot of the indexes. Actually, let me go back to QQQ. Yeah, we've been seeing declining volume since what day was this? Yes, since the start of July.
Yep.
Every day the volume on QQQ has been less, 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 and less. So
Yep.
not a lot of conviction. I just say that right now. And for investors who are patient, this is probably one of those times where you just kind of look for opportunity and kind of pick your spots and
Yep.
not try to do too much.
Yep. Yep. I
Yeah.
mean, if you look at the moves like that is happening this week, like I don't think there's a high conviction. It looks like it's more accumulation.
Yep.
I think institution traders probably positioning themselves for the next week, like when earnings start happening also. So I think a lot of big boys are sitting on the side trying to figure out what's going to happen in the next couple of weeks.
Mm-hmm.
So again, I agree with you, man. The volume hasn't been good. Like today's volume, it was like 35% below average. Like if you look at the average overall volume of all the U.S. equity, it's very very low. So again, I think this is more of those times where it's like accumulation. And it's a good, in my opinion, looking forward to seeing those numbers that's going to come up from those earnings that's coming up. The next couple of weeks is going to give us a better understanding of how the direction of the market is going to be. So it'll be a good thing to watch out for.
I agree 100%.
Yeah. So let's talk about SK Hynix, man. SK Hynix finally start trading today. They close up about 12% at 168 and 1 cent per share. It's again SK Hynix is a South Korean memory chip giant. I mean, they raised about $2.6 billion offering by offering 177.9 million American depository receipt priced at $149 each. You know what I mean? So if you think about it, this is bigger than Alibaba back in 2014. I think that's what one of the other, not necessarily a Korean, but more like a Chinese company. Again, if you look at it, man, like it's just debuted, and I don't know how to compare it to SpaceX. You know what I mean? Because SpaceX had a lot of hype behind it. I don't know if SK Hynix is going to be like the same type of hype behind it also. So let's talk a little bit about that, man, because I mean they didn't close too far off from the high for the day. I mean, not too far down.
Yeah. So this offering from SK Hynix, to me, I think what they did is they saw an opportunity where the demand for their stock is so high
Mm-hmm.
because of the memory shortage that people want to directly be involved in. Micron is probably one of uh, the pure play companies that you can play the memory shortage in. You can't, there was no direct access to Samsung and there's no direct access to SK Hynix. So they saw an opportunity to raise money in the US markets. So
Yep.
this is not an IPO. This is what's called a secondary offering because they're already a
Mm-hmm.
publicly traded company
Correct.
just on a foreign exchange. So they raised $26.5 billion, which is a lot, and they can use that capital to kind of hopefully help the supply chain. But I looked at the things that the CEO said. He said 2027 could be one of the worst years when it comes to them trying to be able to meet the demand. And they're
Mm.
saying that the supply may not be able to meet the demand until 2030.
Sheesh.
So think about that. Now, also remember that one of their SK Hynix is a big partner to NVIDIA.
Yep.
So they're kind of like hand in glove in what is being built out in these data centers. So I would say, I mean, this might be one of those stocks where just based on that supply crunch, this thing could continue to climb and kind of pull what Micron has done
Yep.
because Micron has said the same thing where it's kind of like we can't we can't meet the supply in the short term, at least for right now. I mean, we can't meet the demand right
The
now.
demand. Yep.
So we'll have to see how this plays out because the three memory suppliers, Micron, SK Hynix, and Samsung, right? They're all saying the same thing.
Mhm.
They're all saying the same thing. And none of the hyperscalers have announced that they're scaling back on CapEx spending. No one has said it yet. Now, if any of them start to say, okay, we need to curtail our spending, then all of these supply companies are going to get hit. To me, in my opinion, I think all of them are going to get hit. But
Mm-hmm.
the Metas of the world, the Microsofts of the world, the Amazons of the world, and all of these companies that are kind of investing and building out this AI infrastructure, nobody has pulled back their capex spending. Nobody, not yet. So as long as that remains steady and as long as that expectation remains the same, I think the suppliers of this supply chain, like the Microns and the people that are building that are supplying the hardware to build this infrastructure, they are the beneficiaries right now. So
Yeah, big time, big time. And I think this is bullish for a lot of those companies too. I mean, you talk about Nvidia, Micron, Broadcom, TCMC, AP, Applied Materials, Lam Research, like all of those companies, they're going to be benefiting from this, especially if the memory spending is really going to be that big when it
yep,
comes to like all this AI build out and stuff. I mean, overall, I think this is a good problem. Now, a bad problem is if those spending start to slow down, because AI is not cheap, y'all. Like
it's not
they're firing people left and right to be able to spend more money in in building AI and all this stuff. So it is not cheap to keep up with this thing. So at what point will companies start seeing the return on their investment, right? Because right now it's more investing, take out debt for it. Like just this fueling the fire, basically. But at what point are they going to be able to start seeing some returns on those investments, right? So again, it is going to be an interesting race to see exactly how um, all of these pieces kind of come together. Hopefully, some of those companies that's like Oracle, Microsoft. I mean, the one company, like you keep saying, Apple, haven't really spent too much money.
nope.
I don't know if that's a smart move. I don't know if it's like them being cautious, but something is happening with Apple where they're not convinced yet to be able to jump into this wholeheartedly,
Correct. Yeah,
right? So
they haven't put their full foot into it yet. The only thing that I will say is they keep talking about this revamp with like Siri and all that stuff, and even all of that has been getting delayed. They've kind of cut back on some projects. They're still trying to figure it out right now. It's like, where do we spend our money to get the best return on investment? Which is a very, very different philosophy than what Meta is doing. I think
yep,
Meta is kind of just throwing money at different things
yep,
and kind of seeing what sticks.
yep.
Because I saw today they're talking about creating their own chips. A couple months ago, they were talking about buying more NVIDIA GPUs, and like they're just, I don't know. Meta has been very scattered when it comes to their AI strategy, and they've been trying all kinds of different things to see what will work. I'm not going to sit here and say that that's a bad thing because who would have thought that their $1 billion investment in Instagram would turn into the cash cow it is today? I don't think
Yeah,
anybody could have figured that out
yeah, yeah.
because Instagram was just an online photo album.
Literally,
there was no
literally.
revenue. There was no
Yep,
revenue.
yep,
And so when they made that purchase, everybody was like, huh? But now look at what Instagram is today. So
yep.
I'm not going to sit here and, knock his vision, but I will say you also have the whole metaverse thing that was a
Yeah,
big flop.
yep, yep,
So you got to just take the good with the bad at this point and just kind of see can they figure it out. But we'll see. But
yep.
the AI story is like every day it's evolving into something else. And as each earnings quarter happens and these companies report, to me, you got to listen to what these projections are and what
Yep,
the expectations are over the next couple of quarters and months. So
yep, yep, yep. But else, let's also bring out the question, like, I know this is one of the things that we're going to talk about. I think this is actually going to be a good segue is who wins in this race? Is it the people who are spending the company who are spending money for the AI build up, or is it going to be the suppliers? Who's actually winning this? I know you talk a lot about, people, companies who are shovels, have the shovels for the AI build. Those are the ones that actually are end up making money and all this stuff.
mhm.
But let's talk about this. Like, who actually wins in this race? You know what I mean? We've seen all these companies spending money, but we also see companies like, TCMC who are actually supplying the things that those companies spending money on. Who is actually going to be the big winner after all of this?
So I think there are what I like to call phases in this process. And I think we can split the AI build out at least into two separate stories right now. Like you
Mm-hmm.
mentioned, we have the people that are suppliers who are providing the picks and shovels. So we have the TSMCs, we have the AMATs, we've got the VRTs, we've got the SK Hynixes of the world, we've got the Samsungs, the Microns. So these are the people that are seeing benefit for their product as
Mhm.
of today. They are benefiting from the hyperscalers build out right now. So if you look at the revenue, the margins, and you look at the reward that these companies are getting, they're getting rewarded today. The SanDisk, the AMDs, like all of these companies that are building the hardware to go into these data centers, they are getting paid today. Then on the other side, you have the spenders. So you've got your Googles, you've got your Microsofts, you got your Alphabets, you got your Metas, you got your Amazons, you got your Oracles. They are borrowing money, taking money from free cash flow and pouring it into the infrastructure right now. So they're not necessarily benefiting as of today.
Mhm.
But over the years, could that switch? And it is possible because what people are expecting is that as these companies are investing in the AI infrastructure, their assumption is that over the years, these hyperscalers are going to be able to produce more profits more efficiently with higher margins. We're not seeing it today, but do we see that in the next 2 years, three
Yep.
years, 4 years, 5 years? And what that could do, which it may not be a good thing, is this could come at a cost to people.
Mhm.
It could come at a cost to people. You've got your Salesforces, you've got your ServiceNows, your IBMs, they are the ones that are investing heavily into AI
Mhm.
with the hope that they can do more with less people. We'll have to wait and see how that plays out. But I
Right.
I, I
Right.
really feel like those companies, whoever can execute that the fastest, will be rewarded tremendously.
Yep. Yep.
but
Yep.
I still feel that it's going to come at a cost of headcount. Like
Absolutely.
some of these companies are going to start continuing to lay off people, and
Absolutely.
we don't know what that's going to how that's going to play out with the overall economy. But we're already seeing it today, and I think it's just going to escalate and magnify.
Right, right,
Yeah,
right. Now the speed of that is going to change, right? As they figure out more and more how to automate some of those things and do more with less, I think that speed is going to change. I think now we're seeing a huge amount of people getting laid off, maybe like, once every year or something like that. But I think as this thing actually starts speeding up, it's not just going to be people from certain departments, it's going to be entire departments probably just gone, you know. You see a lot of our engineers now, like they are back in the day. If you got a degree in computer engineering or computer science or whatever, you nobody can touch you. Like you are needed in the tech industry. Now it is starting to be bare bones where the department can go from 100 engineers to maybe like 20 engineers, and then now they're using AI to be their assistant to help
correct,
them with all those other stuff that
correct,
you typically rely on people on. So
correct. Yep, yep,
again,
yeah,
it's I agree with you. Like the company that can figure out how to automate these things and how to like reduce costs, whew, boy, oh boy.
yeah. Because when we've been saying this, when you look at companies when they're looking to reduce cost overall, the first thing they chop off is headcount because those
Account.
that's the most expensive piece to their business is
Yep.
the 401k contributions, the health care, the salaries that go with all that, and all the other
Mm-hmm.
benefits that go into
Mm-hmm.
having an employee. If you have an AI agent who can work 24/7, doesn't get tired,
Yep.
doesn't need benefits,
Yep.
doesn't need a salary, then it's like, okay, I can do more with this agent or two agents or three agents compared to paying, you know, a
Mm-hmm.
a actual person. Now,
Yep.
I've heard some stories about like token usage. Some of these companies
Yes.
are spending a lot of money on
A
tokens, and
lot of
and
money.
and they're trying to tell some of their employees to scale back. That's going to be a big piece of that too, is that token usage is going to need to get cheaper.
Yep.
So how that plays out over time, we don't know.
Yep.
But if you're having these agents run more often, that can get expensive. Like I think Facebook had to send an email to some of their employees like, hey, y'all got to chill on this on this token usage because it's y'all running up
It's
the
eating.
bill.
Yeah, it's eating up. Yeah, yeah, yeah. Because I
So,
could tell you, like, with the company I work for, we are given $1,000 a month to be able to use Claude, basically,
mm,
and that's your token. So you can burn through that if you want to, but you get $1,000. Now imagine like a company who's actually have over, let's say, 100 or 200 people working there. 100,000 a month turn into like 200,000 a month because each employee is going to get one. So it can get really expensive. So you can
can
see why they're eliminating headcount
mm-hmm,
and maybe increasing spending on like people to be able to use AI and stuff, because it's cheaper if you only have one agent, one person, $1,000 a month. That's not a lot of
exactly,
money for a lot of those companies. But as
correct.
you have more and more thousands of people using it, that is a lot of money. And
Yeah,
again, this goes back to all of those other AI build that we talked about. The reason why token costs so much, energy,
yes,
memory storage,
yep,
all of those things. That's why it costs so much. So now we are gonna, I'm telling you, all of this thing is going to be connected back all the way back to energy again. And then we keep talking about this, but there's going to be at some point where those companies are going to realize, like, oh shoot, this is what we need to increase in order to reduce the cost down for some of those tokens and stuff.
correct.
So it's
And
going to happen.
yeah, and I'll also say too, I've always liked your analogy that you used about the cell phone and how pricing has
Mhm.
changed over time, right? Now you can there's unlimited data,
Unlimited.
there's unlimited minutes
Yeah.
compared to like 10 years ago, 15 years ago, you know, 2 hour conversation, 3 hour conversation and surfing the web, that's
Yeah.
expensive.
Yeah.
Now
We
you
used to
can
wait till
get
7 o'clock. It was to 7 o'clock to
correct,
make.
exactly. Now you can get an unlimited data plan. Like I
Yep.
pay like $88 a month for unlimited minutes and unlimited data,
Yep.
right? And that's kind of like there was no way you could have paid that 15 years ago or 20 years ago.
Correct.
So as we get deeper and deeper into the infrastructure build out and we have either more data centers, more efficient energy,
Mhm.
a more efficient grid, if token prices kind of follow that same pattern where it gets cheaper, it gets more commoditized, it gets cheaper and cheaper and cheaper, then that's going to also help company margins as well because
Yep.
employees are going to be able to use more tokens for less price.
Exactly.
So
Exactly.
that could happen over time. We just,
Yeah.
like back in the day, like, we didn't have as many cell towers as we had today. We didn't
Yep.
have the infrastructure. So it's kind of like the network companies didn't want to overload the system.
Yep.
So they were like, okay, if you want to use free minutes and be on the phone all day, you got to wait until after a certain period of time.
Yep. Yep. Yep.
So
Yep.
as the infrastructure grows, as we get more data centers and all of these things, that could be the same phenomenon where it's like, okay, the grid can handle more. We have
Mm-hmm.
the infrastructure to handle more. Price eventually starts to come down.
Yep. Yep.
Yeah.
Yep. I mean, go look at BlackBerry. BlackBerry actually has a really good case study on this. When they first came out, BlackBerry was like one of the biggest cell phones back in the day, right?
Hmm.
But they couldn't sell a lot of BlackBerries because the more people you put on the network, it was slowing everything down. I think they even crashed a couple of data centers because they were using the regular radio signal to be able to kind of communicate and stuff. So they didn't have a lot. And then iPhone came and changed the whole thing. It's like, forget this. We're just going to use the internet for you to be able to communicate with people. That changed the whole perspective on how things went.
Correct. Yep.
Think about it. Today we use the grid to be able
Hmm.
to power those data centers. If something new come out, now you don't have to worry about limitation with data centers and all this stuff. That takes care of the whole situation when it comes to this token and stuff. So something has to
Correct.
change.
Correct.
Something has to change.
Something has to change.
Yep.
And whoever can solve that power problem
Woo, boy.
is going to be a very wealthy person. I
Oh
mean,
boy.
I think about, I got a lot of family in Nigeria, and I think about back in the day when my mom had to
Yep.
buy calling cards to call my grandpa
Yeah.
and to
Yeah.
call people overseas. Now it's kind of like you just use WhatsApp.
Yeah. What's up? Yeah. Yeah. Facebook solved that thing with one little app.
Correct. You just use WhatsApp. And as
Yep.
long as they got internet and as long as you got internet, you can hold a conversation.
Yep.
There's
Yep.
no, I mean, man, my mom used to spend
Bro,
bread on
I don't
calling
remember if people
cards.
I don't know if people remember that, man. I mean, maybe it's mostly like African households or people who live international and stuff, but Bro, those cars used to be expensive, like ten
Yeah.
dollars for 10 minutes, $50. It's
Yep.
like you spending a lot. $50 back in the day, like 10 years ago, that's a lot of money, y'all.
And ain't no African talking on the phone for 10
Hell
minutes.
no. The first 10 minutes is just greetings.
Yeah. So I remember back in the day, if you wanted to call someone internationally, man, it
Boy,
was expensive. But
it was
now,
a hassle. It was a big hassle.
what's
You know,
WhatsApp solved that problem?
not that
Solved
problem.
that problem. Yeah. So
People don't even buy calling cards anymore.
no,
Those
that's a
companies out of business now. So
that's a dead business.
yeah, yeah.
Yeah. So I
But
think we're go ahead.
no, I was gonna say, but overall, I think something's gonna change with this whole build out. So,
Hmm.
and we talked about this a lot, and I think it's gonna be whoever solved the energy crisis that we're facing right now. That's gonna help with those tokens. That's gonna help lower all this cost, and after that, it's just gonna be unlimited again. So we'll see.
Yeah. So, and I think as far as names that I like, when the when we kind of flip from a infrastructure supplier reward to more of the builder's reward, Microsoft, Amazon, Oracle, and possibly Meta, they all play in that cloud space, right?
Yes.
To me, that is such a crucial part of the business. And if they can figure out how to monetize that and expand their usage and the demand for that, to me, those are going to be the long-term winners because look at what the cloud is used for. It has so many multifaceted use cases. And as the AI build out grows, I think cloud demand is also going to grow. So
Mm-hmm.
those companies are going to be in demand. It's just a matter of all the money that they're spending today, how soon can they flip the switch to turn that into a higher margin business?
Right. Right.
That's the key. Because if you listen to these like Amazon calls, right? Amazon has different businesses, but what does everybody focus on? AWS, AWS,
AWS. Yep.
AWS. When you listen to Microsoft, what do people focus on? Azure,
Azure.
Azure, Azure. Why? High margin businesses.
Yep.
So
Yep.
that's what people like. No one really cares about, oh, how much money did they spend on Prime Day? And that's a low margin business.
Yeah.
They're
Yeah.
focused on the cloud business because they know that that's such a high margin business. As that grows, it's going to
Yep.
help the bottom line long term.
Yeah. Yeah. But yeah, man, whoever figures that problem out, I mean, that's honestly that's gonna be the biggest research you guys want to do. Then I think in the next 5 to 10 years, if you really want to do good in the stock market, I think do a research on who's gonna figure out that whole energy crisis that we have right now with AI. If
Hmm.
you can figure out who that is and you are in early, I'm telling you, man, you're gonna be happy. But that's gonna require you listening to those earning calls, jumping in and reading some papers and actually digging in. Unlikely you have AI now, man. It's like just load up whatever you need to load up and have it summarize it for you. Like you don't really have to like do too much research these days. But again, I think we are getting closer to that time. But now we're still kind of maybe like in that phase one, phase two of the AI build. So we're not really like at that high critical phase where we really need to start looking at energy and stuff. So, but we're gonna get there. I don't know
Yeah,
when, but we're gonna get there.
I agree.
Yeah. Man, let's talk about this. Raymond James. Why are they so darn bullish on SpaceX? Like that for me, that is ridiculous, man. I mean, they didn't really give a timeline, but let's do a comparison. For example, Citigroup, their price target for SpaceX is 200. Goldman Sachs, 205. Morgan Stanley, 300. Morgan Stanley, 300, I think 300 is 600. Raymond James, $800 for SpaceX as a target. I mean, I don't know if they're looking at SpaceX as a space company anymore. I think they're probably like adding more stuff to it. I don't know what it is, but let's talk a little bit about that because this is a crazy price, man.
Yeah, so I sat down and I read their investment thesis behind why they feel that SpaceX could get to an $800 price target. So let me just tell you what an 800 price target means for SpaceX. At $800 a share, SpaceX would be a $10 trillion plus company. 10
Crazy.
trillion, right? So that is 440% upside from where we're trading today. Billy gave you an idea of where everybody else is around. And the consensus for most companies is somewhere between 240 and $250 a share. So Raymond James, what they're looking at is that they view SpaceX as infrastructure, not merely a rocket company. So this is what they said. They said they're comparing SpaceX potential importance to railroads, electric grids,
Mm.
um, and the internet. And the thesis is that SpaceX could become the transportation, communications, and computing platform supporting an entire new space economy. Sounds very far-fetched, but what do I know? Anyway, it says the key in the foundation, it says Starship is the foundation of the valuation. So fully reusable starships could dramatically reduce launch cost while increasing payload capacity. That would make larger satellite constellations, national security platforms, direct to device connectivity, and eventually orbital AI infrastructure economy possible.
Mm.
So the Starship business is key to what they feel SpaceX can do. They said the infrastructure flywheel is their bull case. So this is what they're looking at. They said in their model, Falcon is funding Starlink,
Mhm.
Starlink is funding Starship, and Starship is enabling the next generation of business. And as each platform gets more and more successful, it strengthens the next one rather than it operating as an isolated segment. So they're saying that as each piece of SpaceX gets stronger, the whole business is going to grow. Now, listen to this. They said Raymond James projects revenue to increase to $38.5 billion today. They say they're expecting their revenue to increase from $38.5 billion today to over 837 billion by 2031.
That's
And they
wild.
said they are expecting EBITDA, so earnings before interest, taxes, depreciation, and amortization, to go from 17.7 billion to 696 billion. So
That's wild.
to me, what that means is that SpaceX over the next 5 years, they need flawless execution,
Yep.
no mistakes. Is that possible? To me, I would say no, because if we've seen Elon Musk run companies, there have always been hiccups along the way. Now, have
Mhm.
they been able to figure it out? I would say yes. But I don't think that you can jump from where you are today to these projections in 5 years.
In
Maybe
5 years, that's
that is crazy. That is crazy. But like I said, what do I know? Right? But these are astronomical numbers. Like you're talking about a company, 837 billion in revenue in the next 5 years.
I mean, where is this gonna come from? Mostly gonna be probably government contracts. You know what I
Maybe,
mean?
maybe,
Because I'm just thinking maybe other countries are gonna
maybe.
start,
Yeah, that's true.
so that's the only way I can see them like growing that fast is for other countries to actually start buying something from them.
You can also say that with government contracts, government administrations change. What if you get an administration that isn't so bullish on spending money on
Right,
space
right,
and they cut back? That's going to hurt revenue.
right.
That's why I said the execution almost has to be flawless.
Mm-hmm. Mm-hmm.
You know, I don't know, man. That is very, very ambitious. I'm not going to say that it's impossible because I've seen what Elon Musk has been able to do with Tesla. But to me, the timeline is a little bit too optimistic in my opinion.
Yep. Yep.
But
Yep.
dang, I mean, $800 price target, that's crazy.
I mean, we'll see, man. We'll see. I mean, Elon is capable of doing some crazy stuff. So I don't know. As long as he's still part of the company, I think people are going to be investing in it. That's the only
Hmm.
thing like I see. Like right
Correct.
now, it's not necessarily investment in the company; it's investment in the ideas that
Correct.
Elon has, and he proven like a couple of times that he's able to navigate those crazy waters, be able to kind of bring a business to fruition and be able to make it profitable. So this is going to be a challenge. So we shall see if he's actually going to be able to meet that um, demand for for them to go 800. But yeah, I don't know if it's going to happen within the next 12 months, but we'll see, man. That's an ambitious goal.
Ambitious. So
Ambitious goal, man.
yeah, we'll be
So let,
watching. I'll be watching that closely, see what happens.
yeah. Well, let's talk about next week, man. Next week is going to be an interesting time because we have CPI. CPI is actually going to be next week, I believe, right? So again, I don't know what CPI going to look like because we're looking at June numbers. I mean,
Hmm.
yeah, June numbers. So we'll see if any of that stuff will happen with does CPI. I keep forgetting CPI. Does it take energy into account or no?
Yeah, so CPI does so CPI. I keep messing up. CPI and PCE do take energy into account,
Right. Yeah.
but core CPI and core PCE
PCE.
do not.
Okay.
They take out food and energy.
Yeah.
A lot of people tend to focus on the core number more than the headline number.
Mm,
The Fed also focuses more on the core number rather than the headline number for PCE.
yeah.
So
Yeah.
yeah,
Yeah.
that
Yeah.
you're correct on that. So we'll see what happens.
Yeah. So a hot CPI could maybe like we probably can see like higher yields, maybe pressure on some of those growth stocks also. If you get a lower CPI, maybe see lower yields and maybe another AI rally. We never know. Maybe something will happen there where we can see some rally going on. Also, we have the earnings: J.P. Morgan, Goldman Sachs, Johnson and Johnson, Netflix, BlackRock, and a few more are all reporting next week. That's going to be very, very important to see where is the market going to go and all this stuff. Do you have any favorite that you're looking for in terms of those ones that's going to report next week?
The only thing that I will probably be looking at is the investment banks. I kind of focus a little bit more on the investment banks rather than
Mm-hmm.
the traditional, brick and mortar banks. Um, I will say that from a yield standpoint, the 10-year got above what 4.55 now as of
Yep.
today.
Mm-hmm.
And I looked at spreads. We've been hovering around 9.745, 9.7. I mean, yeah, 9.74, 9.745. Yeah. So we're kind of creeping up a little bit.
Yeah.
And
Yeah.
I don't know if that has to do with also the war kind of escalating. So from a risk standpoint, there's a little bit more risk priced into the market right now.
Yep. Yep. Yep.
So, that is something that I will say you have to keep in mind because I always tell people the bond market will signal danger before the stock market ever does. And right now we're kind of hovering in an area where it's kind of like, you got to be a little cautious. So we'll see what
Don't
the
want to
banks
be lost,
say.
Wale.
Uh-oh, did we lose you? Can you hear me? What happened? Let's see. What network are we on right now? Uh-oh, and I think I lost. I think I lost Billy. Hold on real quick. Let's see if we can get Billy back on and see if he joins us. Is that better?
Here you go. Yeah, you're back now.
Okay, sorry about that. Technical
Good.
difficulties. But what was I saying? Yeah, I was saying that the bond market, will price in risk before we see it in the stock market. And right now, I'm seeing sort of elevated spreads.
Yep.
Um, Not something I would be overly alarmed about now, but I would be cautious. We still have the war possibly going on in the
Still
background,
happening. Yeah.
and then we gotta. Uh,
Are we losing you again? Oh, we lost Wale again.
Can
There
you hear
you
me
go.
now?
Yeah,
Okay.
you
Yeah, yeah,
got you
yeah.
were frozen, man. I was like, wait, what happened?
I don't know why the signal. I don't know why the signal keeps going in and out. I see why. I think it's my extender. It's
Okay,
not. It's not connecting to the main router.
got you,
But
got you.
yeah, I think I'm a little bit cautious based on where the 10-year yield is trading because as
Yep,
we've gotten above 4.5, that's kind of been the area where the market has struggled a little bit. So we'll see if we start to come down, depending on
yep,
what we see with CPI and all of that stuff. So I
yep,
have
yep.
more of a wait and see attitude going into next week.
Yeah, I mean, then we got, I mean, Tuesday, we got JP, Bank of America, Goldman Sachs, Citigroup, Wells Fargo, all the banks are reporting. Then on Wednesday, we have some of the chips in healthcare. So we got ASML, Morgan Stanley, BlackRock, Johnson and Johnson. And then Thursday, we have TSMC. They're going to report. And then we have Netflix. I really haven't heard anything from Netflix, but we'll see. They keep increasing the prices on us, so we'll see what happens. Have you seen those? Have you seen those videos of people making like Netflix documentary with the sound they always
Yeah,
use?
yeah, 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 yeah,
It's been
yeah.
hilarious. It's been funny. They had a whole war on threads. Netflix said, "Oh, now we got to make all this documentary." And somebody was like, "Well, with all this prices you guys keep increasing on us, you should have enough to make all these documentaries." You know what I mean? So it was a whole war going on with Netflix on threats. But and then we have UNH, United Health Group, also reporting on Thursday, and then GE Aerospace also reporting on Thursday. So again, big companies reporting next week. Is a mixture of different things. It's not all concentrated on banks or tech. It's just a mixture of everything. So we shall see how the consensus is when it comes to CPI. We'll see also how those banks report it. And then, yeah, we just go from there and see how the market's going to react to all of those different numbers. And so it's going to
Yeah.
be a very interesting week next week, to say the least.
And I will always say that if you want companies that are going to give you the eyeballs what's going on behind the AI build out, ASML and TSM are going to be the companies
Mm-hmm.
that give you a clear, like they give you really good vision on what the future could
What's the future
project
going to look like? Yep.
because there
Yep.
is no AI build out with those two companies.
Right.
So
Right.
what they say on those calls is very, very, very important. And as an investor, if you're interested in investing in some of these AI companies, to me, those are two of the most important companies to listen to when they report. Don't
Absolutely.
don't worry about what happens with the stock. Listen to what they're saying
What they're
about
saying.
guidance and projections.
And that's very important because that's going to give you a good idea on now what's the next investment is going to go into, you know? So
Hmm.
that's going to give you a really good idea on what the trajectory of this whole build that's going to look like. So
Yeah.
again, I definitely agree with that. But overall, man, like I said, next week is going to be interesting. With all these different companies reporting, all the banks reporting, and all this stuff. So be on the watch out, be on the lookout. It's definitely going to be some volatility in the market next week. So it can be a good thing if you're on the right side. It can be a bad thing if you're on the wrong side. So just be patient and see if you can find a good entry to some of those stocks. All right, man. Let's wrap it up. Let's see if you have any other last minute items or last minute thoughts you want to give going into the weekend and next week.
No, I think for the most part, I think to me, you just got to wait and listen to what some of these companies are going to say to lay the foundation. Because once you hear from the banks, you hear from ASML, you hear from uh, TSMC, then we start rolling into the Apples, the Googles, the Microsofts, the Amazons. Those names are going to be very important to what we hear long term about some of those projections. I'll
Yep.
also say when I looked at the NASDAQ 100 weighting, like when you look at QQQ, Micron is now a top 10 position.
Yes.
Micron is now a top 10 position in the NASDAQ 100. And I was kind of like, oh, okay. And that's $1 trillion company now. So that is a very interesting rebalancing of what has happened under the hood of QQQ and other, tech indexes. But yeah, to me, they are one of the most important companies moving forward if this memory shortage continues. But now with SK Hynix trading on the US exchange, people have more access to diversify how they want to play the whole memory story. So
Facts. All good stuff, man. Again, as we head into next week, man, all eyes are going to be into earning seasons and also the numbers on CPI. So please keep an eye on that one. And we always tell you guys, man, to remember, don't chase the headlines, follow the money. We try to break down to you guys all the noise in the market and just bring you some clarity and all this stuff. So if you guys enjoyed today's episode, please be sure to like, subscribe, and share the Wall Street Rundown with someone who's serious about becoming a better investor. Make sure you guys follow us on YouTube, on Instagram, all of that. From Billy, Wale, man, we'll see you guys next week. And yeah, hope you guys just be ready for volatility next week because it's going to be a fun week trading, man. So I'm excited
exactly.
for it. I hope you guys are excited for it. So we'll see you guys next weekend. You guys have a good weekend.